Hi, this is Randy Finney with the Right Side of the Chart, and today is Tuesday, April 25th, 2017. This is part two of a two-part video series update on the cannabis trade ideas. I have 40 stocks on my watch list. There's a little bit of overlap because a couple of these are listed on both Canadian and U.S. exchanges. But for the most part, there's about 3 dozen or so. And in the first video, I covered the first 20 along with some tips and strategies on trading the sector. This second half, I'll cover the remaining 20. It should move a lot faster. I'll just cover the charts. There were quite a few which I was lukewarm to. There are a couple, potential bullish ones, some that have just broken out, some that are poised to break out above trend lines or resistance, but then there's also quite a few that are broken down. So as I mentioned, it's pretty much a trader's market right now because for the most part, the sector, and again, I'm speaking generically as a whole, a lot of these stocks are digesting the big run-ups they had early in the year, like vape. We're going to start with here. This is number 21 on my watch list out of 40. There's almost a 2,300% return that it had leading up to the U.S. presidential elections. That was really the pinnacle so far for a lot of these stocks. They had the big hype leading into the U.S. Elections. And since then, we've given back some of those gains, and that's perfectly normal and healthy price action. The key is the majority of these stocks, particularly the ones that I was focused on before, are still well off their lows and are still very much, for example, vape, as much as it's come back in, it's still up about 400% off those lows in August. So, you just have to take a longer term approach to these. Here's a downtrend line, break out of the downtrend line, nice rally, and then we had an uptrend line. That uptrend line broke. That was, the first warning sign that for a potential trend reversal. Now, what I'm watching, just fast forward here, we have support here around the 0.0062 level. You can see a pretty well-defined support level there. We've been dancing on that level, so this forms what they call a descending triangle pattern with that and the downtrend line. So your breakout or buy signal would be on a break above the downtrend line. I need to modify this first target level. I'll do that in a second. Now I wanted to point out one scenario here. There is what I refer to as potential but not confirmed divergence, positive divergence on the PPO and the RSI. So one scenario here, if we do break that support, this may morph into a bullish falling wedge pattern. And your next support's down here. So that's one scenario, but we can also break out of that descending triangle pattern. And let me just try to hone in on this target here. I need to adjust that line slightly to make it a little more accurate. That's about the penny, about 0.9 would be your first target there. And then you can see additional targets. Longer term, this is what I'm looking at to see it challenge those November highs, as well as with a lot of these stocks. And then after that, there is overhead resistance, but it's a lot of thin air really. It's a thin zone. Blue skies if vape can take out that level over time. So those are the levels I'm looking at. One strategy would be to scale in, from where it's currently at because it's sitting on support down to about this level, not adding below that. You don't want to dig yourself in a hole on any of these stocks or any stock for that matter. And so that would be a ideal buy entry, buy zone, and or a breakout of that level, and of course a breakout of that next resistance around 0.009. Looks something like that. So that's vape, DEWM, Dewmar International, downtrend lines, downtrend lines, downtrend lines. So you basically, you take this one on breakouts of the downtrend lines. It's choppy because of the thin trading action here. And you also have this support zone I should mention down here, very, very significant. So there's two objective buy levels on this stock. Anywhere here in this support zone between these two lines. So we've been flirting with the top of that support zone lately. It's offered numerous chances to accumulate a position or go long with a stop somewhat below. Like a lot of these thinly traded stocks, you're going to have to allow for these intraday brief spikes down. Those are probably just single fills. Maybe somebody had an order Maybe if a broker allows, most brokers won't allow market orders on stocks that are, a fraction of a penny. But if they did, you put a market order in that can fill you wherever they want to. And that's my best guess as to how these errant candlesticks formed. But you can see most of the price action, a lot of the support goes on in this area here. And your next buy signal would come on a break of that downtrend line. Now, again, they're whippy intraday signals. So we had a couple intraday breaks here. So the real deal is really a close above that level, maybe a second candlestick close, and then you might be looking at another one of these runs. And I try to always impress this point. Birds of a feather flock together. Keep an eye on the sector as a whole. Replicate, make your own watch list. And I just put mine up every day, and you'll start to notice when there's movement in the sector. You'll have more broad participation. Right now, as I said, it's hit or miss. Some of these are bullish, some of these are bearish, some of these are neutral as I go through these charts. Again, just a function of the fact they had such big runs leading up to the U.S. elections. All right, ERBB, American Green, downtrend line that goes back a ways. This one's traded well to the technicals. We had a downtrend line here. We broke out, and it was good for a quick trade. We hit that first target area I had up there. That was about a 37% run. Since then, it's pulled back. So the story on this one, you have a stock coming back up to support. Here's support. You see all the reactions back there. Then it finally broke that support, regained it here. And that level has acted as support since. What is that level? Good question. That is at 0.0012. So again, cheap little stock. You also have a potential trend line coming into play there. So there's intersecting support levels, this uptrend line as well as horizontal support. But that's a very low price, thinly traded one. But there has been a lot of volume coming in since last fall. So like a lot of these, you're starting to see more and more volume, and that's better for traders. You less spreads, you get a better fill on the stock. Next one up is EAPH, Easton Pharmaceuticals. Every time I run this video software, it does something to the charting program, makes them load slow. Here we go. All right, this is a clear pattern. Here's a bullish rising wedge, negative divergence right there at the highs. That was a warning sign, a little too much, a little too fast. That was a run of 3,560% or so. And naturally, the stock took a breather. It needed to. That's an appropriate breather, in my opinion. A rough measurement, and this is just a ballpark measurement. You take the widest part of a wedge, which I'm doing here, add that to the point at which the wedge broke down, and that gives you an approximation for the measured target. Well, that one, as you can see, pretty much for the most part hit its measured target, and that may be all it needs. It had a downtrend line here. It since took out, back tested, or near back test. But it's like everything else. It's just in this, the bigger picture is it had a healthy run up, and it's just consolidating those gains. So we're still, these things could break any day now, or they could slog along for another 6 months, or they might work their way lower. If this line goes, this trading range goes, your next support level or possible trading range is down here. You can see a few reaction highs. I have a line here. You have a reaction high over here. So maybe you scale all the way down to here with a stop somewhat below. And then ultimately you want to see a breakout above the top of this recent trading range. That would be your next buy signal in that one. And until then, it's probably just chop city for you if you're in that one. ENRT, Intertopia Corp. What do we see here? Well, we had negative divergence right here at this point. We had a wedge. You can see this line here, a rising wedge that broke down, and that played out for a pretty healthy correction all the way down here. Now what do we have? We've come full circle, more divergence, negative divergence, bearish rising wedge pattern. You can see with the line here, and there's your top. So this part marks the divergence, these two peaks right here. So there's one that I probably wouldn't be chasing even though it's near its either all-time or at least 52-week highs. You have support down here around 0.684. You can see some pretty well-defined support. So if the trend line breaks, you might catch some support there. If not, and I can just tell you, right now, looking at that wedge and everything else, and looking at these reactions back here, you can see a reaction right here, reactions here, and reactions here. Therefore, this is a pretty decent support level. An ideal scenario on this one is to let it come back into that level. If you could accumulate it there, that'd be, I think, a good buy point. Maybe I see a reversal there. If it goes down below there, there's your next support level. But I favor, buying it here. I think that level will most likely hold. And again, that's looking forward. You have to see what the sector is doing at the time. Meaning the majority of these stocks. And unfortunately, as I mentioned in the trading room today, there is no sector chart that you can pull up for, because this is an industry in its infancy. So I don't believe there's any major companies like Standard & Poor's or Russell or anybody that has an index out there for the cannabis stocks. There's a couple ETFs, but they're too new, one or two at least, and they don't have enough charting history. So I pretty much have to make my own. That's what I'm doing here by going over my basket of 40 or so stocks. Arrow, same story, big run up into the elections, massive run up. The stock went up 500 and something percent. Had a divergent high right here. You can see the negative divergence. Came in and it came back into a good level. This was a pretty decent support level. And still is. You can see all the reactions back here, a couple reactions there. So we found support at the top of that range. We had a descending price channel, these two parallel lines. We broke out, and this level here, see this line I've had? We're holding that support so far, but the stock, the breakout has been lackluster, not a lot of follow through. So maybe we fail. Maybe we come back in and back test this channel at lower levels, something like this. Come down here, hit that support again. In other words, this is a good buy zone. Let me just put it out for you here. I mean, you can buy these anywhere. These pullbacks, this consolidation phase could end at any time. So this is certainly a support level, and a stock is at support. So maybe you take a starter position here. If it moves lower, you add at the top of this support zone here, maybe also on a back test of that trend line, and then your target, should this one reverse trend, at minimum would be right here, that 293 level. Very possible this next level here, or any of these lines above. Next up, CHUM, Chuma Holdings. Very thinly traded. You can just look at these candlesticks. When they look choppy like that, that means there's not a lot of volume, so be careful. This is a support level here, about 2.5 cents a share. And then this is the big level it needs to take out. There's also a downtrend line. I can go back here for a while. So here's your bigger picture on this one. Again, a thinly traded, not one of my favorite, but you have this bulk of the support zone, or I'm sorry, bulk of the trading range, I should say, is between these two lines. We've had a couple spikes above and a couple below, so that really widens the trading range like this. But you have this downtrend line. So to me, a clear buy signal would be a break of the that downtrend line, especially over those previous reaction highs, and that would open the door up to a move right here as your first resistance. You can see a little resistance there, and then that next target around 43 cents a share, and possibly go all the way up here to close to the $1 share level over time. But right now that one's just been trading sideways for a while. So if you're taking these as long-term investments and you have patience, you can afford to get in a stock with a sideways trading range as long as it's not in free fall. But again, be cognizant of the aggressive and highly speculative nature of these companies. Many of those without proven management or business model. That's why they're penny stocks. MJNA, a nice series of downtrend lines. It's a wash, rinse, repeat situation. Take it on a break of the trend lines. It has these rips, some bigger than others. And this is we had an uptrend line here to look at. That uptrend line broke, led to correction. Now we have not the best defined trend line. I don't want to try to force this one, but there's a potential trend line there. Bigger picture is stock is at some resistance. It's not super well defined, but I see some reactions in there. Has resistance in this area. I do like this one longer term, but until it clears these highs, and if things get really ugly in the sector, I'm looking at this resistance zone down here is a possible buy point, a possible end of the correction. That'd be a pretty big drop from where it is now. So let's just say I don't have a very strong opinion on this one. Again, we'll have to watch the sector for more developments. TWMJF. I had, again, not so crazy about this downtrend line or this triangle pattern, but there it is. It connects a few points to the upside. It connected a few points to the downside. Recently, that was broken. The selling hasn't been impulsive. We're not seeing a waterfall type sell-off, but I don't see really good support on this one until down to about this level. And that line is at 553 roughly. And if that goes, here's your next support down here. So there's your ideal buy point. Or if the stock can power up and get above this downtrend line, especially if this downtrend line becomes a little bit better formed. By that I mean a few more reactions. Let's say we bump it again, and then finally break above it. That's gives it more validity in my book, the more reactions that you have on that trend line. So your buy point would be a break above the downtrend line, or a pullback to this support level around 553 or so. TRTC, after, like everything else, heck of a run up, and once again, it's well off its bottoms. It's low back here, 8 cents a share or something, and went all the way to, above 56 cents. So a heck of a run up. And like a lot of other things, it's been digesting those gains, slowly moving down to sideways for a while, still well above those lows. That's what you have to look at, the bigger picture. And I was highlighting a lot of these stocks going back well before the elections, possibly, if I'm not mistaken, back to 2015. And, that one's still up 182% off the lows. But let's look at today. Let's look at where the stock is. I see a lot of reactions on this orange line. That's why I have it color coded. Almost a reaction there, and we're at that support now. So here's one you could possibly take at support. I don't see any screaming buy signals. It is oversold. Last time it was oversold was right here, and it led to a big pop. It was oversold right here, led to a big pop. So there's one potential. I don't really refer to oversold as a buy signal, more of an indication, similar to the way divergences warn of a likely trend change. So it looks objective here. Give it a little room. They might want to flush out move. And if you're a swing trader, a quick trader, you can just trade this up to a pop. Ideally be up to that 29 cent level, we'll call it right there. Be your first, I think, my first swing target if I were to step in here, which I may do on this one. We'll see. I'll take a look after the video, look a little more in depth. CNBX mentioned on this one. All of these I've updated recently in other videos, so you can see in the same trend lines we talked about. So this one had a divergent high right here, monster run up. I mean, just from, I'm not even grabbing the lows that occurred earlier in 2016. Just from this point, that was about a 19th, almost a 20,000% run from September. Okay, so to say that stock was overbought, I think that'd be an understatement. Divergent high, pointed that out. The divergence has played out. The primary uptrend line broke, and I had this support level here. We've been dancing on that, trying to hold it, but just below it. And if the stock has more downside to go, I wouldn't step in here yet and buy it. I think that correction may not be enough for how much it's run up, but I would be interested to buy it down here. Let me give you that level. That would be about 96 cents. So step in a little bit above there, start buying around 98, 97 or so. Stop below. Let's see if we can give you a trend line here to watch as well. It's nice when you can see trend line support come in. Well, there's a trend line right there. We're not far from trend line support, so maybe it holds that. But yeah, I wouldn't step in now and aggressively buy these at these early supports unless there was a lot of momentum in the sector. If you start to see a lot of these stocks start firing on all cylinders, then you'll start to see buyers stepping in on the other ones and buying them at these earlier, more shallow support levels. By shallow or early, I mean relative to the scope of this pattern in the move, that's a relatively minor correction so far. So again, I could easily see this one and would prefer to buy it back here, all other things being equal. But sometimes we don't always get what we want if you're looking to buy a stock on a pullback in an uptrend. And that's why I say have plan A and plan B. Plan A is to buy it down here. Plan B is if the sector all of a sudden starts picking up, these stocks may reverse, and that may be all this one needed to pull back. Who knows? We'll see. Next one up. Let me just zoom down here. I'm moving to my watch list off to the right of the screen. All right, ATTBF, Abatis Bioceutical Corp. There's your divergent high. We really had a divergent high number 1 there and a roughly equal high there to that other point, maybe slightly lower, but close enough for government work. So either way, divergent high there, let's just say right there. And that first one certainly played out for correction. So here's the story on this one, guys. If you like it, and again, do your own due diligence, do some fundamental research on these companies. But there's a minor support there. That's certainly resistance. That would be bullish if and when that level's taken out. And this is an excellent support level down here. I have it as a support zone because we had a couple reactions back there. But so the ideal buy point, if the sector continues to have some weakness, you want to grab it down here about the 10-cent share level or so. And if not, maybe it holds this level and goes up, and then a breakout above those previous reaction highs would be bullish. IPR, Innovative Industrial Properties. This is a REIT. I'm assuming, I haven't done my due diligence on this one. They probably lease, grow house facilities, maybe distribution centers, who knows, to the cannabis sector. Relatively new, only a few months trading history, so I can't really render a very strong opinion. You can see the levels there. Like most stocks, when you break out to new highs, that's bullish. Typically, depending if there's not divergences in place, and here's your lows. So not much of an opinion. Let's just move on there. APHQF, Aphria Inc. There's a uptrend line which has been broken now. We had a divergent high. You can see here the negative divergence, rising wedge. So this one, I'd prefer to see it come back in. You have support right here. You can see support on that line. But this one may need to come down. See all these reactions back here. That would probably be a better buy point for this one, more objective. Yeah, especially considering the scope of those divergences. Terra, loved this one for a long time, but this was a key target, a long-term target I had back here, and it hit that target. It went a little bit above it, but so far it's failed to stay above the 1810 level. It also had a divergent high, which I pointed out a couple times in the trading room, and it's been soft since then. So I'd like to see. I'm waiting to recycle back into this one. I've had a couple long and short trades on it, but those are usually short-term trades. But I should make that line a little more clear. Between those two lines there, the 1440 and 1335 level, there you go. That's a nice pullback area. Maybe a little bit below that because we have a reaction high back here. So this is what I'd like to see on this one. Pull back. Oops, wrong tool. Pull back to that area, anywhere in there, and then move on. Might need to base around for a while before it blasts on through that 18-ish level, 18 to 20-ish level. It's a pretty wide range, and that's common because you had a stock that went up from about 450 a share all the way to 18 in relatively short order. This thing can move big, and therefore you get these momentum-fueled overshoots, and so that's really that's still that 18, we'll call it 18 to 20 areas, pretty significant resistance. And longer term, I think that has potential to be taken out and be bullish. But right now, that near term might be a little more weakness in the stock to come. SPRWF, Supreme Pharmaceuticals, well, that looks pretty clear to me. Big sideways trading range. After a heck of a run up like everything else, bullish rising wedge. I mean, this is TA 101. There's your negative divergence, confirming the bullish nature of the wedge, a breakdown, and not a huge correction. As I often say, stocks can correct and will correct in one of two ways: either time and or price. This one has done both. It corrected a little bit in price, but more so in time relative to the run. So that's healthy. You can't have stocks go up forever. You can't have them get too far ahead of themselves. The farther they go, the harder they have to crash. So, story on this one is when it's finished and when it's worked off those overbought conditions, and if the fundamentals of the company are there, or it doesn't even matter on a lot of these because they're just startup companies and a startup industry. You just need to see the momentum and come into the sector. So what you're watching for is a break over the 145-ish area, and obviously a break down below the bottom of that trading range would be bearish. You don't really have any significant support all the way down here around the 38-cent level down here. So just watch it for a break in either direction. Until then, it's dead money, and I have no desire to be in a dead money trade. MCOA, Marijuana Company of America, symmetrical triangle. We broke below. There is support right now that we're dancing on that was just below that triangle. So you see these breakdowns of trendline support. They're just not impulsive. The stocks are just kind of limping down. So this sector's in sort of zombie mode right now. And again, it's just a function of it consolidating after those big run-ups leading up to the presidential elections. So there's your buy zone. You have a support zone right here. You can scale into that one, into that support zone, and then if it goes much below, let it go. Buy signals, what would be bullish? Well, if it holds that level and it breaks above this trend line, it's probably going to go up to challenge those previous highs around 20 cents. TBQBF. There's a downtrend line, broke out, ripped, and it's fallen back. It was back testing it. Now it's just slightly below. You can see the horizontal support levels below. So very thinly traded stock. You might want to, on all of these, I suggest, if you have the time, especially if you plan to put them away as longer term holds, do your due diligence. Check out the fundamental story behind. If you're swing trading them, the fundamental story doesn't matter that much. Trade off the technicals, game a bounce, get in for a few days, a few weeks, get out, make 5, 10, 50%, whatever it is. But those are your two support levels or buy zones. So this one's either going to come down here if it continues lower, wrong tool, and reverse somewhere around there, or may come down here, and I think at that point it's a good buy with a stop not too far below. That should hold that level. That's pretty decent support right there. We had quite a few reactions, but again, not a lot of trading history on that, and a pretty choppy one at that. GNRH, Green Grow Technologies. Not crazy about this uptrend line, but I've had it drawn, I believe, on the last couple videos. More concerned about these horizontal levels. I know this chart might look busy. To my eye, what I see is a lot of reactions on this line from above and below, including one recently. Yes, there were reactions here. Of course, that's why I have all these lines. But as well as this one. So ideally, I like to buy this one on pullbacks around the 5-cent level. If it gets another pullback there, I think that looks good. Might even have, could have potential divergence if it undercut that low or matched that previous low. But and then the next buy signal will be a break above this yellow downtrend line. That's GRNH, Green Grow Technologies. CNAB. Oops, gotta clear that out. Okay, CNAB had this funky candlestick shadow there, so you have to almost get rid of that. You can see a series of downtrend lines and breakouts. Let's see. So rips, and now we have an uptrend line with a breakdown. So a dip. You gotta get rid of that, and you can see it better. Pretty well defined. Support, well, we had support right here and we just broke it, so that means we're probably heading down to that next support level there. Let's just forget about that one. It's in a downtrend now and I don't see any reason to step in and buy, and that is it. All right, that's the remaining 20 stocks on my cannabis watch list. If you guys have any questions, if you have any other candidates out there that you follow, let me know. I'll be glad to add those to my watch list and track them. This has been Randy Finney with Right Side of the Chart. Have a great day.